the inaugural meeting this session of the Financial Rescue Caucus. And again, the purpose of the caucus is to really examine the critical risk factors associated with it. And I'd ask members if this is okay for today, because we do have the hard stop, if we could go through the two presentations first and then ask questions afterwards. Does that work for everybody? And then our new co-chair is Ben Sanchez. Ben?
Thank you, Mr. Chairman. I'm honored to be part of this and to have the opportunity to co-chair, and look forward to diving into these issues with you. Thank you.
What I thought I'd do is have the other members introduce themselves so you know who's here, and then what we'll do is we'll ask the same for both the IFO and Clifton Larson Allen.
Brett Miller, 41st District, Lancaster County. Good morning.
Pam Delicio, the 194th, parts of Montgomery and Philadelphia counties.
Seth Grove, 196th District, York County.
Wendy Thomas, 178th, Bucks County.
Matt Niddle, Director of the Independent Fiscal Office.
Sean Walker, Principal with CLA.
Jim Kreiser, Principal with CLA.
Keith Novak, Principal at CLA.
And gentlemen, for Jim, Sean, and Keith, you'll find it a little bit easier if you drop the mic down closer to you, and you want to make sure the green light is on when you're doing it. Matt, what I thought we'd do is, if this is all right with you, you publish a 5-year outlook that is, for me, it's become somewhat like a Bible in terms of how effective it is at providing projections. I thought what we'd like to do is ask you for an update, particularly focused on some of the critical risk factors that you think we should be looking at as a legislative body.
Very good. Thank you for the opportunity to present some information to you this morning. What I thought I'd do is to just take 5 or 10 minutes and actually walk you through what we're currently seeing right now, both in the revenue picture and in the economic picture, both for Pennsylvania and the U.S., and then tie that in more to a 5-year outlook, because it will directly play into that, if you will. So what you have in front of you, hopefully, is a one-page handout, and we will publish this on our website, and we'll send out an email and a tweet so it can be viewed by the public. And we have 3 banks of numbers. The top bank of numbers is just the growth rates for the general fund tax revenues, what we're seeing currently, and that's followed by some economic variables and then some economics for the U.S. And I'll just start at the very top with the general fund tax revenues. I will say so far this year we've had a good year in terms of tax revenues. Things are running stronger than we had anticipated, both for our estimate and the administration's estimate were overestimate. And I would attribute that to the Tax Cuts and Jobs Act and a strong labor market both in Pennsylvania and the U.S. And at the very top of the first bank of numbers, and I'll just focus on a few of these growth rates, the big story this year is the growth rate for sales tax revenues. And the first 2 lines in your handout, there are 2 series there, both for non-motor sales tax, one of our largest revenue generators. The first line is what we refer to as the base amount. And this is the amount of sales tax revenues after we control for transfers and tax law changes such as Act 43, marketplace sales. What is the underlying growth rate if we control for those so we can get a handle on consumer spending? And you can see we had some very strong growth in the second and third quarters of 2018 at about 5.5%. But you'll also see that those growth rates have moderated going forward. And again, I would attribute that to the fact that the tax cut impact is playing out right now. As you know, there was some gains in the income from reduced withholding, and that kicked in about the second quarter of last year in 2018 too. And you can see that the strong growth there of 5%, and now the underlying base growth rate has fallen to 2.9% in the first quarter of 2019. Below that is the amount that's as reported, so this would include tax law changes, and the big story and the growth rates that you'll see for the third and fourth quarter of 2018, you'll see growth rates of 7, 8, 9%. We had a very large pickup from internet sales tax revenues. We think for this year, for 18-19, those internet sales tax revenues that we're now collecting are running about $610 million. So that's what's driving that very strong growth rate that you'll see in the third and fourth quarters of 2018. And again, it's tailing off and coming back down to more typical numbers of, we think, down to around 3 or 4%. Just a few other items to note on the revenue outlook. You'll see, again, very strong growth rate in motor vehicle sales tax revenues. In the third quarter was about 10%. Those are also coming down, closer to 4% now. Corporate net income, once again, you'll see in the third quarter we had very strong year-over-year growth of nearly 32%, and then 24% in the fourth quarter. Our final payment is also running strong, so it was a very good year for corporate profits. Personal income tax withholding, we are starting to see a little moderation in the Pennsylvania labor market. It was running very strong in the latest quarter for the 2019 quarter one. We have a growth rate of 3.7%. Personal income non-withheld, so these are the estimated payments and the final payments. You'll see in the fourth quarter of 2018, we had a drop-off, and that was due to the federal tax law changes where people sped up their payments last year in order to take advantage of the unlimited state and local tax deduction. So there was a movement forward. We got a very large bump last year, and this year, of course, it reversed itself, and that's why we have that negative growth rate. And finally, realty transfer taxes. The Pennsylvania housing market has been doing fairly well. We did see a little weakness in the first quarter of 2019. However, due to the drop in the mortgage rates, we expect that to revert and return to a more normal growth rate. The second bank of numbers, we have the outlook, what we've seen recently for economics in Pennsylvania. Real GDP growth for the entire year for 2018, we think it's running about 2.1%. We expect that to moderate more down to about 1.7 or 1.8%. We don't see a recession for this coming fiscal year. We do think there is some risk in 2020 of a potential recession, but certainly not for the upcoming fiscal year. We just think it's going to return to a more normal growth rate. Wages and salaries, these are all the wages paid across all workers in Pennsylvania. You'll see the latest data for 2018 quarter four at 4.2%. The line below that is the annualized rate of jobs gains. The latest quarter is 47,200 jobs. That's an annualized rate, so it's not just for the quarter. It's as if the growth rate in that quarter was annualized through the entire year. And this is what I'm talking about, the moderation in the Pennsylvania labor market. You can see last year in the first quarter, there were nearly 70,000 jobs produced, and that has now declined to about 47,000 in the first quarter. And that's not bad news. 50,000 is really a normal rate for Pennsylvania. If that pace of jobs creation held up, it would be pretty good. Right now, the unemployment rate is about 3.94% in Pennsylvania. So we don't think that jobs growth of 60,000 can maintain because the population is only growing by about 0.1 or 0.2. So there is a disconnect between the population growth and the jobs growth. And to have growth rates such as we saw last year, it can't be maintained unless the demographic outlook picks up. Inflation, the Philadelphia Consumer Price Index, you can see it's subdued still, about 1.5% in the latest quarter. And then finally, the last economic measure is the Home Price Index for Pennsylvania. These are the increase in the value of existing homes across the entire state. And again, it's holding up fairly well at about 5%. The final bank of numbers, I'll just touch on a few, is for the U.S. As you know, the GDP growth last year was quite strong. It's about 2.9% for the entire year, although it's currently moderating. Wages are starting to pick up for the U.S. The latest reading is 4.6%. The average monthly job gains for the U.S., you can also see some moderation there in the first quarter at 180,000 jobs on average for the months in the first quarter. Much like Pennsylvania, inflation is remaining fairly low, a little higher than Pennsylvania. Domestic corporate profits, we have very strong growth, as I noted, in the third and fourth quarters of 2018. We'd expect that would moderate as well into the first quarter. And the current earnings reports are decent. I wouldn't say they're outstanding, but they're holding up well. And then finally, the last U.S. measure is the real equipment investment. And again, you can see the very strong growth we had over the last year and a half. Again, I would attribute some of that to the Jobs and Creation Act due to the bonus depreciation that it probably pulled some investment forward and sped it up. We do expect that would moderate as well. So overall, I'd say for this year, we're going to have a surplus. We're overestimate. For next year, we expect the growth rate to moderate some, again, down to about 1.82% real GDP growth. We do think there's some risk of a potential slowdown in 2020. It may not be an outright recession. The wild card in all of this, as we saw in 2016, is the national election. What we've seen is the last 2 or 3 elections, there's a lot of uncertainty. It introduces people and businesses hold back, if you will. They're reluctant to spend or to invest until they see the outcome of the election. We saw that the last 2 elections. We expect that would happen again in 2020.
Matt, you're referring to my election, or?
No, this is just the national election. But I'd say that the real wild card to watch here is the demographic outlook. We do think going forward, the demographic growth is about 0.1%. The latest data show, we're looking at migration data. The demographic out-migration from Pennsylvania has slowed. It used to be about 30 or 40,000. It's now come down to a level more like 10 or 20,000. So that's moderating too. There's a less of a net outflow out of the state. Offsetting that, however, is international migration. That's also dropped off. So there's less folks moving in from overseas, but we have less natives leaving the state. So we still think the demographic growth will be about 0.1 to about 0.2%. And of course, in the long term, over 5 years, that's really the brake on the economic growth is the demographics. So we don't see that changing too much. On the back, I'll just finish up. We have a very simple graph that is showing the annual growth rates in personal income and our non-motor vehicle sales and use tax. Ordinarily, these 2 series would co-trend together very closely, but you can see for the latest year the disconnect between the 2. And once again, that's driven by 2 factors. It's due to the internet sales tax collections. We think that's, again, about $610 million for this fiscal year. And it's driven by the Tax Cuts and Jobs Act, the injection, we think, of about $7 billion in disposable income. Some of that is, of course, being spent on taxable items. And with that, I'll conclude the presentation, and I can take questions now or wait till the second presentation.
If it's okay with the members, what I thought we'd do is just go into Clifton Larson now and about the audit, and then kind of tie the 2 in together, just again in the interest of time. I think we're going to be okay time-wise. I also want you to know that we've been joined by Dave Zimmerman as well, who's come in. So if I could, I'm not sure who's going to start. Keith, you could go ahead.
Yes. What I'd like to do is just briefly go over what we did for the Commonwealth this year with regard to the audits, and briefly go over the results, and then, of course, open it up for questions. So we jointly audited the financial statements of the Commonwealth with the Auditor General's Office. We also performed what was called a single audit, or audit of your federal grant programs, issued a letter on internal control and compliance in accordance with government audit standards, and a management letter as well. With regard to the audit of the Commonwealth, we once again issued an unmodified opinion, which is the highest level of opinion that can be obtained. There was one new issue this year, and that had to do with the implementation of GASB 75, which deals with other post-employment benefits, and I believe we had alerted you to the fact that that was going to happen last year. And basically what that does is it requires the Commonwealth, and all governments for that matter, to record the total other post-employment benefit liability on their financial statements. Prior to this, you were only required to record the underfunding. And by that I mean the amount by which you were required to make a contribution but didn't. And as a result of that, the financial statements were restated from the prior year in accordance with that standard, so it's not something that's unusual or something that only the Commonwealth did. And the details of that can be found on Note 18 on page 196 of the Comprehensive Annual Financial Report. That restatement was substantial. There weren't any other real significant issues in the financial statements. With regard to the letter on internal control and compliance, we had no material weaknesses that we noted, and that's about the best we can do as far as that report. We had a number of management letter comments that dealt with issues within departments in the Commonwealth, but they were of a level that they didn't rise to either a material weakness or a significant deficiency. And management is working to correct those issues. With regard to the single audit, we tested 27 major programs. And of those, 8 of the programs received an unmodified opinion, and 19 of the programs were qualified for one or more compliance aspects of the program. When you perform a single audit, there are a host of compliance requirements that may or may not be applicable to each program. And those compliance requirements can be anywhere from 1 requirement to up to 10 to 12. And if you fail any one of those requirements, it can lead to a qualified opinion on that program for that requirement. And so we did have some qualified programs. We did have a total of 19 findings on federal awards. The other thing with regard to the Commonwealth is they are what is considered not a low-risk auditee. And what that means in federal parlance is that the threshold of what needs to be tested is raised. If you were considered a low-risk auditee, the threshold would be 20% of the federal expenditures have to be covered. As being a not a low-risk auditee, that threshold rises to 40%. However, due to the size of certain programs, especially Medicaid, I believe, is the largest, the coverage that we obtained is 96%. So 96% of the federal expenditures of the Commonwealth were subject to testing in the single audit. Now, the question might be, well, what causes you to be not a low-risk auditee? There are a whole host of items that can cause that, but generally speaking, if you have a material weakness in internal control, a material weakness in compliance, or qualified programs in any of the last 2 years, that will automatically make you an other than low-risk auditee. As far as I can recall, in looking at prior year reports, one of those issues has been present every year for the past number of years. And so the soonest that you could potentially become a low-risk auditee would be 2 years of clean reports with no findings and no material weaknesses going forward. So next year, we anticipate that once again, the Commonwealth will be a other than low-risk auditee. However, again, since we have to test Medicaid, because by definition it's considered a high-risk program, we will be more than reaching the 40% threshold every year. So it really doesn't have an impact on the amount of testing that needs to be done or on the testing that we're doing. And that's basically all I had as far as a formal presentation.
And do you all have handouts that you have or you could send us that we can get out to other members as well?
We can send you some summary items. We have some items that we prepared to summarize for the audit committee, for the governor's office, and so we can certainly take some things out of there, and I'll share them with you.
Jim, that'd be great if you could. What I'd like to do is open this up for member questions. Pam.
Thanks, Frank. Good morning. How are those 27 major programs selected? Are there criteria? Is it random?
There are a whole host of criteria, but let me let Sean answer that because he is the single audit expert.
So as far as there's federal criteria that is out there that we have to follow, that's a risk-based approach. The programs are basically categorized as they call them type A or type B programs, and it's based on a threshold that is calculated. I don't have that threshold in front of me at the moment. Was it 44.9 million is the threshold between those two programs. And then all the type A's have to be selected at least every 2 years. So that's kind of how they rotate through. But it's a risk-based approach based on finding results to determine whether they're higher risk or low risk programs. It's also just a cycle that kind of goes through the programs. recently they did change the ruling a little bit. So like now if we have clean programs, we actually are forbidden to select that one again in the following year. And we have to select lower risk, smaller programs. So over the last 2 years, we've been getting into different programs than we've usually tested. But it is definitely a federal requirement, and it's just it's actually a very complicated calculation to get to it. But it's it basically focuses on the higher risk, larger programs.
But I can also make sure in the materials that I send to Mr. Ryan to give you a summary of what those 27 are. And
Jim, by the way, I have to say, is a constituent, he's on the school board, so I have to be doubly nice to him as well. How much of my property tax? No, I'm just kidding. Wendy, I understand you have a question.
I actually have a few. The first question I have is on the first presentation about demographics. So you said 10 to 20,000 migration outflow or
Yes, for
outflow.
domestic migrants.
And did you look at the age band? Because I'm particularly interested in the age of the people moving in and moving out.
Yes, so we're starting to look at that now. Some new data are just coming out. What's usually happened in the past, it's across all age groups. So even across the so-called brain drain, that there is a large influx of individuals age 18 to 19 attending higher education institutions. Most of those, nearly all of them, then return home. They don't remain in the
Yeah,
state.
we shouldn't even count them.
So even in that age group, 18 to 24, there is a net outflow, but that generally holds across all age groups.
Okay. Because the information I've seen, and I couldn't point to my source at this point, but is that Pennsylvania has older people moving in and younger people moving out. And so I'm particularly interested in the facts around that information.
There is, we did observe a few years ago, the oldest breakout that the census has was 75 and older. There was a small net influx for that group a few years ago, but even that has turned around slightly.
Okay.
So we're looking at the latest data now, and we can share that. I think we'll have something by the end of this month.
I would be interested in that. My next question is actually for the chairman, so I'll skip down my audit question. When you're auditing these programs, is your goal to find what I'll commonly refer to as fraud, for example, in Medicaid, or are you simply, what I believe you're doing, is you're simply making sure that the state's financial office puts the right numbers in the right columns and it counts to the right accounts? Because I think people hear audit and they think you are testing for fraud in the system. And 100 years ago, I used to have some exposure to the accounting field, and that would not be my understanding of an audit.
that's correct.
Right. I mean, it's a little more than financial accountability because there is compliance-related tests that we go through. And we do, as part of our profession, have to consider whether fraud could be there. But we don't specifically audit for fraud. And it's specifically in Medicaid, because I get this question a lot,
Right.
is a lot of because there's 60 Minutes always runs these little things about fraud. You know, people, that is actually one of the areas that we don't audit for. I mean, if we knew it was happening, we would say something. But a lot of times that type of fraud has actually happened down at the licensing level with providers that are appropriately licensed that are getting claims.
Great.
We'll test whether licensed people get it, but not whether the person should have the license. That is a completely different type of test.
But when you produce these opinions, you're basically giving an opinion on how well we accounted for the money we spent.
As well as, I mean, because Medicaid,
And
for
compliance
example,
with federal.
correct.
Yes,
correct,
I'm
yeah.
sorry,
So
yes,
those,
got it.
Those two things.
Okay,
with the others.
and I have a question for the caucus at the end about some things we might look at. Thank you.
Outstanding. We have a list of questions that people want to ask. I've got Ben next, and then Brett, and Seth, and then I have a couple of questions. I'm sure we'll go back again for second round.
Thank you, Mr. Chairman. I just have two questions. First one for Mr. Niddle. Matt, if on your first page of your handout, you touched on this briefly, but the realty transfer tax for first quarter 2019, that dip of 3.3%, you didn't seem concerned because of the mortgage rates dipping, and presumably that would spark home sales. Has there been, I'm just concerned as a, potential indicator of, like a lead indicator of people buying less real estate, not home sales per se, but then less development, less jobs. Is there any trend where that's typically lower in the first quarter overall, or any other factors in play there?
Overall, the sales are generally weaker in the first quarter, but since this is a year-over-year growth rate, it should really control for that factor. I do think, from what I can see, that there was the 10-year note went up very quickly there at the end of last year and the beginning of this year. So I feel fairly comfortable that should revert itself. And the latest data that we're seeing now suggests that it is picking up, the housing market. The other thing I can say that's a good indicator, at least in terms of housing, is if you look at the construction jobs, they're holding up very well too. The growth there is fairly robust.
Excellent. Is the same true? You may not know this but for permitting, like the typical development permits that go along, is that seem
Yeah,
strong?
those are holding up decently as well.
Excellent. Thank you. And my second question, if I may, Mr. Chairman, for the auditors, when you identify the issues in the single subject audits, and not the ones that sort of kick it out for 2 years, or I guess it could be that extends it, what's the reporting mechanism? Do you report that to the Auditor General's office, or is it the program oversight when you have, recommendations or things that can be fixed? And then the corollary to that, is there a follow-up, or are you automatically checking the results next year if that program's selected for audit?
Yeah. If you're referring to, just so I can restate the question so I make sure I understand, as part of we're doing our single audits, when we run into issues that we feel are reportable, what's the mechanism to report those and what's the follow-up?
Right.
So as far as, the mechanism of reporting, obviously when we have a finding that goes back to the departmental management to be able to respond to, they have to respond to the finding and also provide a corrective action that is ultimately put into part of the reporting package that goes to the federal government. And then in the following year, we have to follow up on each of those to determine whether they have done what they said they're going to do in the corrective action plan, or whether the issue has been resolved. And if the issue disappears from the reporting package, that is usually an indication that it has been resolved. It'll say in the last year that it's been resolved. Otherwise, it keeps getting reported until it's done.
Gotcha. Is there a sort of omnibus or like a top level of oversight? Would that fall under the Auditor General, or is that?
It's usually, I think management, actually, the comptroller's office is one that's responsible for making sure that they follow through at the departmental level.
Gotcha. Thank you very much.
Representative Miller, and let the record reflect as well that we've been joined by Representative Barry Jawasiak out of Berks County.
Thank you, Mr. Chair, and thank you for your testimony this morning. Several questions. I'm also interested, like Representative Watson, regarding the senior growth of seniors. Pennsylvania is, I think, the 5th oldest state in the nation. And as I'm understanding, there's a net out-migration, but perhaps that's been moderated, or maybe not true, I don't know, of young people, and an influx of seniors plus the rising age of Pennsylvania. Can you discuss the long-term implications, assuming that is true, for Pennsylvania?
Yeah, it is generally true. And I think the real challenge, if we move away from the migration, is just the internal growth, because those age 65 and older are now growing by 3% per annum versus an overall demographic growth rate of 0.1. So you can see that nearly all other age cohorts are actually contracting, but those who are entering retirement or who are already retired are growing by about 3%, which is a very strong demographic growth rate. 5 or 10 years from now, that will then translate to those in the 75 to 80-year-old age category. And once you reach that, then you're having issues with long-term living costs and individuals not having sufficient financial resources to stay in their home. So other challenges also arise. In terms of economics, much like we saw in Europe and Japan, due to various technical factors, as the population ages, one can also expect that growth will moderate. Part of that is due to the fact that more jobs are dedicated to maintaining individuals for health care, maintaining their standard of living, their quality of life, if you will. And for those types of jobs with health care, it's very difficult because it's labor intensive to have productivity gains that would drive economic growth. And if you look at the latest data, and we were just looking at this the other day for another presentation, nearly 40 to 50% of the jobs that are created in Pennsylvania every year are somehow related to health care or elderly care, whether that be in residential facilities or home health care, various different categories. But it's very notable. And that's certainly picked up over the last few years, and we expect that trend would continue.
I have several other questions. You had mentioned some of these I think might all be connected. So you had mentioned that you're anticipating a possible recession in 2020. I know you don't have a crystal ball, but would you hazard a guess as to the degree of the recession that may come at that point?
Yeah, I would. To the extent that we think one would occur, I would characterize it as a relatively mild recession, certainly nothing like we saw in 2008 or 9. I would use as an example either going back to the dot-com bust 01, 02. In that case, Pennsylvania didn't actually have a contraction of economic growth, but it just slowed down significantly. But even a mild recession is enough to put, we think, a dent in the revenues of between $600 million to $1 billion. So it really doesn't take much at the margin to really move the needle on the revenue growth. Even a mild recession would be very notable in the revenue growth rate.
Okay. And the final question I have is, what policies or practices for this General Assembly would you recommend in order to see Pennsylvania be economically strong and its balance sheet strong?
So regarding the balance sheet and in preparation or anticipation for an economic slowdown, of course, it's always ideal to have a significant rainy day balance there so you can react in an appropriate fashion if the revenues don't come in as anticipated. I would also note that in our latest 5-year outlook, we did have a projection of a structural deficit of about $1 billion driven by many factors, shifting funds, moving them to other off the general fund ledger, some shifting of payments, various items. That can work when the revenues are coming in a little stronger than expected. Things move nicely, but when the revenues fall short, then these things are very notable. So to the extent those issues can be addressed, and we're not using one-time measures and things are permanent, so we don't have a structural deficit, I think that's all to the better.
Thank you.
Outstanding. Also, we've been joined by Representative Chris Quinn. Thank you, Chris. And then Seth Grove.
Hello? There we go. My little light's not working. There it is. Matt, just curious, do you recall what the initial revenue estimate it was for the internet sales tax?
Let me check with my revenue analyst.
I want to say it was like 35 million or 50 million. It was pretty low, definitely low.
So we projected.
I can look at what our initial
Yeah, I thought it was fairly low too, somewhere around there.
in comparison to what we've been seeing.
Yeah. So just a point of reference for members, the anticipated revenue was $35 million. We're at $610 million. So, just for the members' sake, I had asked the Budget Office to do some financial condition analysis of CAFRs for the past 6 years. Budget Office did get back. I'd also have a follow-up sheet to kind of explain what those different measures are to try to review, the importance of the CAFR and kind of the financial data we can pull from there. I think you'll find it fairly interesting. Of note, our total operating revenue over population is about $5,754 for this last CAFR of 2018. our total operating revenue, or our total operating expenditures over population is $5,846. So we're about $100 per person greater in expenditure than revenues, which drives some deficits. But just a little helpful tool for why the CAFR is important and trying to derive the data out of that. And appreciate the information today, gentlemen. Thank you.
I can't thank you again enough. This type of stuff is really exciting for me. Matt, let me start. You touch base on some things that I know have been a really big issue with me, and then I have some questions for Clifton, Larson, Allen as well, if you don't mind. In terms of the 5-year outlook, you gave a number of demographic issues, which I think you've covered extremely well. Are there other risk factors that you see in the way that we do various types of financial measures in the Commonwealth that you should say to us as a legislative body, you probably should make sure you're looking at more carefully? I think you did it in terms of the comment you just made as an example about one-time measures, to be careful about that. Are you seeing any other trends that might be different than other states do that you would advise us to be careful about?
No, I haven't seen. I can't point to anything explicitly. What I can say is that currently, if you're looking over a long term, it's very clear to us that the revenue capacity cannot match in a steady state environment after you control for all economic factors and you allow for the demographics. It doesn't look like it can keep up with the expenditure demands under the current law. So again, we do think something needs to change, whether on the spending or the revenue side, in order to address that.
From your perspective as well, going to the more elderly population, when I was on a hospital board of directors, we used to make the comment that a massive amount of a person's life assets are expended in the last 12 months of their life for medical care. And so as the population will get older demographically, that could put a strain should that person run out of money. We're seeing that type of problem with home health care now, where reimbursement rates are not sufficient to allow them to survive, and we've lost about 25% of the capacity in the Commonwealth. Are you seeing other critical risk factors in other industries that you're monitoring that you would suggest perhaps that we should be cautious about?
Again, I can't point to anything specifically. I would note that, again, talking about the demographics, one of the risk factors that we are concerned about going forward, and this just took hold a few years ago, is the contracting labor force. So we're seeing it across the board, that there's a difficult time filling positions, in particular since we're in a retirement boom, if you will, and we'll be in that retirement boom for the next 5 years. So we do see some challenges there, but I think that's generally across all industries, all sectors.
Okay. And is there any questions that I should have asked that I haven't asked?
I can't think of anything immediately.
Okay. Sure. That usually works when I'm doing an audit. For Clifton, Larson, again, I really want to thank you all for extraordinarily helpful. One of the comments that surprised me a little bit when I went out and met with different school boards, the comment, and I'm pleased to see it did not happen when I went to Palmyra, so I want to thank you for that, Jim, was that the negative fund balances that exist, like as an example in the Commonwealth of Pennsylvania on our CAFR, we're showing, I believe it was about an $11 billion negative deficit. We would call it in the private sector, negative net worth, but we call it a negative fund balance. And so I have a couple of questions for you. Is that a real number? And the reason I'm asking the question is, I was surprised the number of people in the financial community where other auditors said to them that that's not a real number, don't worry about it. And I started shaking my head saying it's a real number or it wouldn't be on the financial statements. So is that something that we should be worried about, that the Commonwealth has an $11 billion negative balance?
Well, a couple things. First off, when you're looking at the fund balance or what have you, you really need to define the terms. Are we talking about at the entity-wide level, or are we talking about the fund level? And the reason for that is the accounting is considerably different for both. Now, when you mention $11 billion, I'm looking at the June 30 2018, and it looks like the number was 8.7 billion, which is what I thought it was. When you said 11, I thought that was a little high. The question of whether it's a real number, that's hard to answer what you mean by a real number, okay? We have a lot of liabilities in here that are very long-term in nature that are helping drive this. For instance, your OPEB liability is a significant liability that is driving part of this negative balance. If I remember correctly, from the restatement, we were in a positive fund balance the previous year.
Correct.
Then we restated, and once we restated, that threw it into a negative balance. Now, in a private corporation, your liabilities are generally much shorter term in nature, even though the long-term liabilities are not quite as long. In a governmental entity, an OPEB liability, for instance, may be funded over a much longer period of time. Generally, the life of the participants in the plan, and depending upon what the average life of the plan is, we could be talking 20, 30 years. And that's a considerable liability. So it's hard to answer the question of whether you should be concerned. The real question is, are you funding what needs to be funded in order to liquidate the liabilities over the period of time in which they need to be liquidated?
Well, that's actually why I'm asking the question, because if you combine it with the Independent Fiscal Office's comments, and in light of that comment, the perception is, and I agree with your answer completely, and if I remember correctly, we had an $11 billion positive fund balance the year before the restatement. I think the OPEB was $26 billion that came in, and then the negative fund balance this year was $8 billion. What I was concerned about is the perception, if that does not raise the appropriate level of concern about corrective action, by the time someone gets to the point where they realize it's real, the next step is a going concern opinion. If I were someone lending money to the Commonwealth, and I'm going to have to represent to the Securities and Exchange Commission the financial viability of the entity, I'm going to be concerned about things such as one-time fund balances to balance a budget. Do you have a structural deficit? Are the systems of internal controls in place to avoid those types of structural concerns? And so I'm not actually concerned about that, because the way it came about was with GASB 75, and we all understood how that happened. But that was, GASB 75, in my mind, was merely a recognition by the Governmental Accounting Standards Board that we should be looking at things that private sector companies have had to look at for decades. So my concern is, if it's, I'm going to use the term gaffed off, and I had a number of school board members tell me, and other school boards, that their CPA firms told them, don't worry about the unfunded pension liability and don't worry about the unfunded OPEB at all. They're not real liabilities. And I think from a personal perspective, that sounds like a dangerous thing to tell somebody. Now, I will also tell you that I never heard that directly from a CPA firm, so I don't know how accurate the comment was. And it could be something as simple as, you don't have to pay it today, but it's paid over time, and the person may have presumed they meant to pay it over a long time. So should we as a legislative body and the executive branch take the fact that these liabilities exist as serious in light of the Independent Fiscal Office's comment about the one-time structural payments and the structural issues that we might have to deal with?
Well, part of the reason why the OPEB issue came up with the Government Accounting Standards Board is because most governmental entities did not treat or think of other post-employment benefits the same way they think of and treat pensions. Most governmental entities fully funded pensions or were making efforts to fully fund pensions, but OPEB was one of those things that was in the back of their mind, nobody really worried about. And it's one of those things that snuck up, because when the promises were made, healthcare was not nearly as expensive as it is or has become. So much the same way that you think of pensions should be the same thought process with regard to other post-employment benefits, because those other post-employment benefits are a pension plan just by a different name.
Okay, and I just have two other quick questions, and again, I'll open it up for any other questions that members have or any closing comments. The PSERS liability for the school pension plans are not on the financial statements of the Commonwealth. Why is that?
I believe because of the liabilities of the schools.
If I were to add up all
I'd
500...
have to go back and look at that.
If I were to add up all 500 school districts, would the liability that exists on those 500 school districts for unfunded pension liability equal what PSERS has as the unfunded liability that they report financially?
It should.
It should. That would be one that I'd have to go back
Okay.
and research.
Under the new rule, right, they're supposed to be reporting the overall, not their contribution portion,
Right.
but what all participating members and entities owe as an unfunded or their net liability.
I'm probably one of about two people that's I've read 300 of the CAFRs of the 500 school districts. And I'm going to write a book that will be endorsed by the National Sleep Foundation. And I'm concerned that the numbers I'm coming up with now seem to be well short of that. And what I had heard from some school board members, and this falls in the category of complete rumor, but when I get it completely done, I'll be happy to get it to you. Matt, that's the report that your staff was very helpful with, and I'll get that to you as well. But the comment that came back was the other portion of it relates to the portion that the state is responsible for under a prior act of 2008, but I don't see that then on our financial statements. So that could be a material number. And so as I get that, and Matt, as I promised you, I will get that to you when I'm done. I'm having trouble finding 200 of the CAFRs. And so as soon as I get that, I'll get that over to you as well. And then the last question I have, it relates to the issue of can a state go bankrupt? I know Puerto Rico, the formula that the Obama administration worked out with the Supreme Court allowed a state to go, Puerto Rico, Commonwealth, to go bankrupt, but it has to apply to the Senate. The perception I have in pretty much every place I go to is that a state cannot go bankrupt, and don't worry about it. It's not an issue. Could there ever be a set of circumstances in your mind in which a state would get a going concern opinion? And I don't think Pennsylvania is near that at all. But I wonder if what would happen to our ability to raise money and debt should that happen. And then the corollary question to independent fiscal office is, if that risk factor occurred, what would be the impact on the financial viability of your 5-year outlook if that scenario were to occur? So in other words, if Illinois were to file and request relief under bankruptcy and have to apply to the U.S. Senate, would that then have a spillover effect on the Commonwealth of Pennsylvania?
Well, I'll answer a piece of that question. I mean, the state going bankrupt is, I don't even think there's a law for it. So I think, there's a municipal law for Chapter 9 bankruptcy.
Right.
But even some states, or even communities, some communities can't even do that because some states don't have it on their books that you are allowed to.
Right.
There's usually like someone will come in after the fact. But to the point of the emphasis or the going concern, or what we call an emphasis of a matter, you don't get a going concern. There is a situation where a governmental entity could be in a situation where we would say something along the lines that there's a structural issue and that it is drawing some concern, but the going concern in the contents that you're using it is actually like, you're only going to last for another year, after the opinion date or whatever. So you won't ever really receive one of those, but I can point to, I know the federal government has an emphasis of a matter dealing with structural issues, and there was a point in time where we had one, there was one on the state of Kansas due to some tax law changes that actually created a situation where we felt a need to put one on. It's since come off, I believe, but it can happen where we'll draw attention to situations.
I would encourage you to look at Promesis, which was the Puerto Rico bankruptcy. And in order to be able to go bankrupt, all the state needs to do is apply to the U.S. Senate. The bill would then get passed by the House and the Senate, and then the Supreme Court would rule on it. And then the president would appoint a 3-person panel to do that. Are there any other member questions before we break? And then any closing comments?
I have one. I have one. So I sat on a school board a year ago, and I believe we put the full liability on with the caveat that the state owed us part of it. So I don't know if that's the right way or not, but as just someone who recently was doing that, just 2 cents, but I'm very interested. I understand what you're saying. My question's relevant, or I hope the committee can maybe have a session on this, Chairman, both Chairman, and that's around our bond rating. And I know it was lowered a few years ago, and we pay more to borrow money, but I think it would be helpful for me to understand how it relates to other states, what we can do to improve it, because if we improve it, we pay less for money, helps our revenue. So I see it's all interrelated, and I have many questions around it, so I don't know if we could have a topic on that.
We've
Thank
actually
you.
got one scheduled. Any closing comments?
Yeah, with regard to the PCERS issue, there is a liability recorded in the state's CAFR with regard to their proportionate share of that liability, which is about $290 million. With regard to the individual schools, on an annual basis, the auditor for PCERS should be, or I believe he is, putting out a report showing the proportionate share of each individual jurisdiction, giving them their liability of what needs to be recorded. And so those liabilities are recorded in a lot of different places. There's not just one place you're going to find the entire liability, because each school is picking up its piece of it, and the Commonwealth is picking up its piece.
Matt, any closing comment?
Yeah, my closing comment would be regarding our 5-year outlook and the rating agencies. We do talk to the rating agencies every year, right around November, when we issue our 5-year report. And the 2 items that they're always very interested in is 1, the structural deficit, and 2, the demographics. And that's the 2 things that they're looking at regarding the outlook for the state. 1 we don't have much control over, and 1 we do. But whenever we talk to them, those are the 2 factors that they're very interested in.
That's it. I wanted to thank both of you for coming in, both groups, Independent Fiscal Office and Clifton Larson Allen. I do want the record to reflect that every time someone asks a question about aging, Matt looked at me. I don't know if there's any, if I should read anything into that. But this has been extraordinarily helpful. We have already introduced a number of pieces of legislation geared to dealing with some of the issues that have been brought up in the past. Matt, one of them is on the dynamic scoring capability, and we've gotten assurances that'll move. Some other items is on the CAFR aspects as well. And I want to compliment you all for being here, and thank you so much for your time today. Thank you again.
Thank you.